Vince. Explain this to me. How does the Fed work out of this?
Okay, so the balance sheet had been shrinking for a bit because some of its facilities were going unused. They were expensive as markets got better. But they're living up to their commitments to buy treasuries and mortgage-backed securities. So it's headed to about $2.5 trillion by 4 months from now. It's a time question, right? In the near term, banks are balance sheet constrained. The problem isn't reserves. They got plenty of those. The problem is they don't feel they have enough capital. At some point when they feel they've got enough capital, and if the Fed hasn't reeled those reserves back in, then they'll be ready to go.
Yeah, the system's going to explode with money creation. Now, you got your article here that the Fed is divided on when to start signaling rate increases, okay, late this afternoon on the website of the Wall Street Journal, Vince. But to me, I mean, you listen to this debt creation from Megan and Steve Bell. You listen to Peter Boockvar, who's betting against Bernanke. What the hell is the Fed waiting for? We're talking trillions here. Trillions. They can't just turn that off and on.
But, Larry, you got no better example of what Steve was talking about, that liquidity is fueling stock prices. An article this morning that maybe in 6 months the Fed is going to be talking about changing its wording to tighten sometime in the future, and stock prices go down, the dollar appreciates, commodity prices go down.
Well, geez, commodity prices are going up. Peter Boockvar, today, gold, commodity, Peter, what? Gold? The dollar's going down, gold's going up, commodities going up. Aren't those inflationist signals, Peter?
Yeah, the CRB index is at an 11-year high. Inflation is a process. It's not a one-time event, and there's no question where this process is going as long as Bernanke continues with these policies. But even if Bernanke raised rates to 1%, we'd still have dramatically easy money. And that is what has created this problem. It's brought on too much debt. Bernanke has dug such a huge hole for himself by cutting rates to zero that it's going to be a mess getting out of it. There is no if and ways about that. Commodity prices will go higher, not just from growth overseas, but because money still being easy for longer.
All right. Megan, you don't know me. We've never had you on the program. I'm so happy that you're on. But I want you to know I try to be the optimist, okay? Now, some people think I'm nuts, but I try to be the optimist, even though these storm clouds are clearly gathering and I'm trying to warn about them. Somehow we got to make this story come out okay, Megan. Okay, that's your role tonight. How can this story come out okay? What are your instincts here? What advice would you give people out there? How can we get through this? Because it really sounds very pessimistic, and I don't like that for America, and there's just got to be a way out.
Well, one way that we could make it come out okay is to decide that we want to be grown-ups about spending, and we're going to only vote for the spending that we want to pay for, rather than voting for any bit of spending that sounds nice when it's polled. I think the bigger thing, though, is that, I am pessimistic about the United States government's fiscal future. I think eventually either they're going to get badly disciplined by the bond market because all of this debt is short-term. It's going to have to be rolled over. So it's not like we're borrowing this at 30 years and, we could just pay it off whenever we feel like it. Or something even worse may happen. But that said, the United States economy is still a remarkable productivity machine, and it's still going to be. The fiscal machinations of its government are not going to damage the underlying productivity as long as we keep saving, and we're saving more, producing more capital, putting it into investment, and looking for better ways to do things. We'll hurt when all of this hits the wall.
But this is the new normal. This is this low-growth new normal thing, Megan, that I hear so much about, which drives me crazy because I don't want a new normal low growth. I want to grow the economy. Hell, coming out of this recession, we've got to grow the economy 10%. But I mean, long-term, I'm a Jack Kemp supply-side optimist, and maybe cockeyed, but that's my view. Hey, Steve Bell, one thing Megan says is interesting. She said the bond market may discipline the government. We had that in the 1980s, and we had that in the 1990s, Steve. My question to you is, might the currency markets, by depreciating the dollar, be the big fiscal disciplinarian? Might it happen from the dollar standpoint instead of the long-term interest rate, Steve?
I think so. I think that the problem facing policymakers, and Megan sounds like she used to work on the Hill with me because we agree on this. The fact is that demographics is working against us. Everybody who invests in American treasuries knows that. Foreign analysts know that. They know exactly what's happening to Medicare, Medicaid, and Social Security. And so at some point, I think the bond market and the currency markets are going to punish. But I have to ask you one question.
Please do.
How long do you think we can talk about tax increases or spending cuts or changes in that kind of behavior when we have 10% unemployment and when next year we may have it for another year? And I will tell you, if we have it for another year, every bit of the economic forecast upon which the President and the Congressional Budget Office have based their estimates are just flat wrong.
Well, you're going to get a political turnover in the midterms. I mean, whether you like that or not, whether you're Democrat or Republican, that handwriting is on the wall. Peter Boockvar, let me throw that same question to you. Is the discipline of the U.S. government for the issues that Megan and Steve are raising and the stuff that Alan Meltzer wrote about in the Wall Street Journal this morning, is that discipline going to come from the bond market or the currency market? I mean, I'm worried about a real run on the dollar. The dollar's lost 15%, Peter, in the last 6 months. It could lose another 10 to 15%, which would be a disaster for this country. What's your thinking here?
No, I think it's going to be a combination. I think with respect to the federal government, it's going to be the bond market that sets them straight. And the next black swan event potentially could be a failed bond auction, and maybe that's what the U.S. government needs to change their ways. But when we get there, in the process that we get there, the dollar will continue its downward trend. Yes, maybe everyone's bearish now, it gets a little bounce, but the secular trend in the U.S. dollar is perfectly clear, and as long as Ben Bernanke is running the Fed, that trend will remain down. But it's the bond market that will ultimately set the U.S. government straight, and that's one thing that we have to pay attention to. I mean, just look at yields over the past couple of weeks. We're at 3.49 today in the 10-year bond yield. That's the highest level since August. That is something worth watching.
That's gone much higher. Vince Reinhart, the Federal Reserve...
Larry, can I just say one thing?
Yeah.
We're looking for grown-ups in this town.
Yes.
Hard to find. But if there were grown-ups at the Treasury, they'd start lengthening the maturity of their debt auctions.
All right. Well, I think I read something that they're looking at more 30-year auctions.
Yeah.
But, you know, Vince, can the Fed be caught flat-footed? They may not see this dollar drop. Might the Fed? You worked at the Fed. You were the monetary advisor. Let me ask you, how much further does the dollar decline before the Federal Reserve says they got to do something, like raising rates, okay? We're not in an emergency anymore. The economy's recovering. The stock market's recovered. Business is profitable again. What will it take for the Fed to respond to the dollar drop?
Two sources of complaints. One is it starts showing up in inflation compensation in the Treasury market, so they start worrying about the anchoring of long-term expectations. The other source of complaints is foreign official investors. Yeah. They start signaling they're tired of buying into a depreciating asset. That's going to raise a lot of red flags.
All right, that's an interesting point. Once more around, folks, you've all been great. Megan, is America on decline, or can we get through this?
I think that we can get through this. This country has gotten through worse things. If you think back to the 70s and how dire everything looked, the Arabs were going to own everything, American productivity was over, we did turn it around. We can turn it around again. We just need to have a commitment to both becoming fiscal adults in D.C., and there really are no adults in town, and also becoming fiscal adults in our own lives and not borrowing, more money than we earn in order to buy things, buy houses or whatever else, and saving, because that saving is what ultimately is going to fund the productive investments that are going to keep the economy performing.
Steve Bell, on to Megan's point, fiscal adults and so forth, fiscal grown-ups. Steve, the Republicans have a great opportunity here, but I don't hear them with a long-term spending discipline plan of the type that you and Megan are talking about. I don't hear it. Am I missing something?
Nope, you're missing nothing. In fact, when the Democrats said we have to reduce how much we pay in Medicare, it was Republicans that said, oh my goodness, they're going to cut Medicare. And everybody and his kid brother knows Medicare has to change.
And they all started talking up this phony Social Security cost of living adjustment. Having gotten 6% at the beginning of the year, energy prices fell, and Obama, says we're going to give them a COLA, and Republicans are ready to sign on. I mean, there is no budget restraint anywhere. Megan's right, isn't she?
Yes, she is. And that symbolizes it right there.
All right,
we're going to give them $250.
Just give them $250. That's the deal. Won't get far in $250 with the inflation coming, but whatever. Peter Boockvar, can't thank you enough. Vince Reinhart, Megan McArdle, and Steve Bell. It's a great group.